Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host at AlgoBot, and today we're exploring an expert advisor called separating lines continuation. This strategy is built around a classic Japanese candlestick pattern known as the separating lines, combined with an exponential moving average trend filter and adaptive risk sizing from the average true range. By the end of this video, you'll understand exactly how it reads the market when it looks for a trade and how it manages its stops and targets. Remember, this is educational information only and not financial advice. Let's dive in. Let's start with the big picture. Separating lines continuation is a trend-following expert advisor. Rather than trying to predict tops and bottoms, it aims to join an existing move after a brief pause, using a two-candle pattern to time that re-entry. It works on a single time frame, evaluating each bar once it has fully closed, so its decisions are based on completed candles rather than flickering intrabar prices. Two tools drive the logic. The first is an exponential moving average, by default set to a length of 50. This acts as the trend filter. When the moving average is sloping upward and price is trading above it, the strategy only considers long or buy setups. When the average slopes downward and price sits below it, it only looks for short or sell setups. That directional gate keeps every trade aligned with the prevailing trend. The second tool is the average true range, an established measure of volatility. Here it does triple duty. It defines how closely the two candle opens must match. It sets the minimum body size the signal candle must have, and it scales the stop loss and take profit distances. By tying everything to the average true range, the strategy adapts automatically to calm and busy markets alike. The heart of it is the separating lines pattern itself. This is a recognized continuation signal where two candles of opposite color share roughly the same opening price, and the second candle drives on in the direction of the trend. We'll unpack exactly why that matters shortly. Who might study a strategy like this? It's suited to traders interested in trend continuation, candlestick behavior, and rules-based, volatility-adjusted risk. As always, this is a framework for learning how such systems are constructed. Trading carries genuine risk, and losses are a normal part of the process. Now let's walk through the exact logic, step by step. The expert advisor acts once per newly formed bar. When a fresh candle opens, it looks back at the candle that just closed and the one before it, and asks a series of questions. First, the trend check. The strategy reads the exponential moving average at the just closed bar and compares it to its value 3 bars earlier. If the average is higher now than it was 3 bars ago, the trend is considered up. If it's lower, the trend is considered down. On top of that, for a long setup, the just closed candle must close above the moving average, and for a short setup, it must close below. This double condition confirms both direction and location. Next comes the pattern itself. For a bullish separating line in an uptrend, the strategy detects that the prior candle was bearish, a small counter-trend pullback. The current, just closed candle must be bullish. Crucially, its open must sit within a tolerance of the prior candle's open, where that tolerance is a fraction of the average true range, by default 1/10. This is the separating snapback. Price gave back some ground on the pullback candle, then reopened right at that candle's own open and pushed higher, erasing the pause in a single bar. There's one more filter. The body of the current candle, the distance from its open to its close, must be at least a set fraction of the average true range, by default 1/2. This is the conviction filter. It screens out weak, indecisive candles and keeps only decisive ones. When every condition lines up, the strategy signals a buy at the market price. The short side is an exact mirror. A falling average, price below it, a prior bullish candle, a current bearish candle opening near the prior open, and a body of sufficient size. Risk management is handled with the average true range. The stop loss is placed a set multiple of average true range away from entry, by default 1.5. The take profit is placed a larger multiple away, by default 2.5. That gives a reward to risk ratio of roughly 1 2/3 to 1. Only one position is held at a time, so the strategy focuses on a single, clean setup rather than stacking exposure. Let's look at the actual code that runs inside MetaTrader. At the top, we have the input parameters, the settings you can adjust. TrendEmaPeriod, set to 50, controls the moving average length. ATR period, set to 14, controls the average true range. OpenToleranceAtr, at 0.10, is how closely the two opens must match as a fraction of that range. Min-body ATR, at 0.50, is the minimum body size of the signal candle. ATR-stop multiple and ATR-target multiple at 1.5 and 2.5 scale the stop and the target. Lot sets the fixed position size. Below the shared filters, the tolerance, the minimum body, the open match test, and the current body size, we have the two signal blocks. The long block, long sig, is true when the moving average is rising, the close is above it, the prior candle was bearish, the current candle is bullish, the two opens match with intolerance, and the body clears the minimum. When that's true, the code reads the ask price, sets the stop a stop multiple of average true range below entry, sets the take profit a target multiple above, and calls trade.buy. The short block, short sig, is the mirror image. The average is falling, the close is below it, the prior candle was bullish, the current candle is bearish, the opens still match, and the body still clears the minimum. Here the code reads the bid price, places the stop above entry, the take profit below, and calls trade.sell. Both orders carry the same comment tag, so you can identify them on the chart. That's the entire decision in a handful of lines. Let's bring this to life on a chart. On screen, you can see a series of candles with the trend filtering exponential moving average drawn through them as a smooth line. Watch how the strategy handles both a long trade and a short trade in sequence. We begin on the left in a healthy uptrend. The first couple of candles push higher, closing above the moving average, and the average itself is sloping gently upward. This is exactly the environment the strategy wants for a buy, a rising average with price holding above it. Then we get a pause. The next candle turns bearish, dipping back down. On its own, this looks like sellers stepping in, but notice how shallow it is. It's a single counter-trend candle, a brief breather within the larger climb. The strategy files this away as a potential pullback candle. Now watch the key bar. The following candle opens right back at the pullback candle's own open, snapping straight back to where that pause began, and then it closes strongly higher, well above the moving average. The two opposite colored candles share nearly the same opening price, and the second one separates upward. Its body is decisive, clearing the minimum size filter. Every condition is satisfied, and the buy entry marker appears on this candle. In plain terms, the fade attempt was rejected in one bar, and the uptrend resumed. From there, price does what the setup anticipated. The next candles continue climbing, each closing higher than the last. Price advances steadily until it reaches the take profit target, a set multiple of the average true range above the entry, and the trade closes for a gain in this illustration. The stop loss, meanwhile, had been resting a smaller multiple below the entry, giving that reward to risk balance of roughly 1 2/3 to 1. Now the market character changes. Near the highs, price stalls and rolls over. A couple of bearish candles push back below the moving average, and the average itself flattens and begins to slope downward. The trend filter has now flipped, so the strategy will only consider short setups. Watch the mirror image unfold. First, a bullish candle appears, a small counter-trend bounce against the new downtrend. This is the short side's pullback candle. Then the decisive bar arrives. The next candle opens right back at that bounce candle's open, snapping back to where the bounce began, and closes firmly lower, below the moving average. Two opposite colored candles, the same open, and the second separates downward with a body large enough to clear the filter. The sell entry marker appears here. Price then follows through to the downside. Successive candles print lower, carrying the move down until it reaches the take profit target, placed a set multiple of average true range below the sell entry, and the short trade closes in this example. Once again, the stop had been positioned a smaller multiple on the other side of entry. Notice the symmetry across both trades. In each case, the strategy waited for the trend filter to agree, waited for a shallow counter-trend pause, and then required that sharp snapback to the prior open with a convincing body before committing. That patience is the whole idea. It tries to enter continuations only when the pause has clearly been rejected, rather than chasing every wiggle. And because the stop and target are both measured in average true range, The trade automatically sizes its risk to current volatility. And that brings us to the end of our breakdown of the separating lines continuation expert advisor. We covered how it uses an exponential moving average to define the trend, how the two candle separating lines pattern times a continuation entry, how the average true range shapes both the filters and the risk, and how it manages stops and targets on both the long and the short side. Everything you've seen here is educational information only, designed to help you understand how these systems are built. It is not financial advice, a recommendation, or a solicitation to trade. If you found this useful, please like the video, leave a comment with strategies you'd like us to examine next, and subscribe for more MetaTrader 5 strategy analyses. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.